and good to have you with us on this edition of The Last Word. I'm Tanvi Shukla, and today we've got a big discussion lined up for you. Here on Mirror Now, viewers, for now months together, we've been speaking about the state of economy. We've been highlighting in prime time what is going wrong within our economy with a whole host of experts. What is it that the government should be doing? We called it SOS economy because it literally what an SOS signal that was being sent to the government for help. And today, the first step has been taken by the government, not just an acknowledgement that yes, an intervention is required, that yes, the economy is slowing down, but first set of announcements to fix the problem were delivered by Finance Minister Nirmala Sitharaman. And here is what she said. These are the top headlines. Point number one, banks will pass all rate cuts to all segments. This problem that even Prime Minister Modi spoke about, that even though the Reserve Bank of India is cutting interest rates, it's not passing on to you and me, the end consumer. That is set to change now. Headline number two, effectively that means that home and car loans are set to get cheaper for you, the consumer. Headline number three, one of the biggest problems with the budget announcement that India Inc. and the markets, the investors had, was the additional surcharge on capital gains. That now stands withdrawn. Headline number four, the GST structure will be further simplified. The industry is still reeling from the impact of GST, problems of GST refunds, the various tax slabs. The finance minister reiterated the commitment of the government to fix that problem. The other problem was for entrepreneurs, the startups who are looking to raise money so that their businesses can grow. They were being taxed on that money. Effectively, finance minister said that the angel tax will go away. Headline number six, steps are being taken to end tax harassment. An acknowledgement that yes, to a certain extent, sometimes the taxpayer gets harassed by the income tax department or any other tax department. That will now be fixed. Headline number seven, corporate social responsibility violations will not be treated as a crime. It will be a civil liability. There will be a one-time loan settlement procedure for MSMEs, for the small and medium enterprises, and that one-time loan settlement process will become easier and more transparent. For the banks who are supposed to be lending, who themselves are struggling and are in a very bad state, a 70,000 crore liquidity boost will be given. And this one is important, viewers. Finance Minister Sitharaman said that more announcements will be coming in the next few weeks. At least two more sets of such announcements can be expected. So what's in it for the consumer? What's in it for the industry? So far what we have, is this enough to revive the economy's animal spirit? Or is it simply a sentiment booster? And what does India really need to get the economy back? A stimulus or another set of reforms? That's the big conversation tonight. We've got some big reactions coming in to the government's announcement. Take a look.
No, I think the government had been listening. Even the last few weeks, the government had been conducting sort of sessions with various people. Even today, ministers were in Bangalore meeting with the tech sector. But the fact is that they've taken some concrete steps. Now, to be honest, I haven't gone through the details of it. But you look at the stimulus that they're trying to bring in terms of, liquidity in the market. They've withdrawn the angel tax from startup founders. That's going to help. So there are, I think, quite a few concrete steps that are in the right direction. Now, whether it will lead to an immediate benefit or whether it will take a little bit of time, that's a matter of debate. But directionally, it's in the right.
These announcements will give a strong signal that the government is willing to work with the industry to address the issue. After all of us are with the same goal, right? We want the economy to grow, we want jobs to be created, and we want wealth to be created. So here are announcements today in terms of addressing the sentiment issue. addressing the issue of perception, and of course addressing the real issues which are there in terms of startup, for the startups, for liquidity, for looking at harassment. She has tried to address every one of these things.
I think she's addressed a number of concerns, and I'm sure you will see the markets respond very favorably on Monday, because I think the surcharge that she has done away with and the angel tax measures will of course delight the startup sector. Apart from that, I think she is giving that reassurance to the market, to investors, to consumers, that more will be done.
Before we go across to our Power Pack panel, we've got a special guest right on top. Sir Arvind Panagriya joins us live, India's top economist, and our first Niti Aayog Vice Chairman is joining us right now. Mr. Panagriya, thank you for speaking to viewers of Mirror Now. Let me begin by asking you, what's your own view on the series of announcements that were made earlier this evening?
Very positive. I think the Finance Minister has done the right thing. I should say that, I was calling for not going for any sort of stimulus package, and it is not one. It is a reform package. Virtually all, there may be small little things which can be characterized as stimulus or SOPs, but by and large, I think I see this package as a reform package, which is exactly what the government ought to do, that, whenever there is a downturn, that opportunity should be used to reduce the barriers that face the industry, rather than give it some sort of short-term subsidies. So I'm very pleased. I think the government has done a tremendous job.
Well, there's some sense today, Mr. Panagriya, that this is just the first announcement. There are two more sets. Perhaps that's where more detailed announcements for real estate or auto sector will come. Now, just a few days ago, you made a very strong case, like you said, that India doesn't need stimulus, we need reforms. In your mind, what should the government do next to continue this reform momentum to really revive the economy?
Well, the overall list of reforms is quite long and probably will not happen immediately because a lot of the big ones would require legislative changes as well. So the parliament will have to come in session and so forth. But one reform I think that would send a very good and positive signal is privatization. There are several private sector enterprises in which the government's stake is not more than 65%. There are some where it's 54%, some where it's 58%, some 60%. In these cases, it is quite easy because the enterprise is listed. All you have to do is sell some of the shares. And what the government could do is to bring down its stake in these enterprises below 50%. And that sort of, paves the way for a board to take over the management. So there will be one very good positive signal. It will show that the government believes in a private sector-driven economy. And as an matter of economic principle, I feel that, unless an enterprise serves a public purpose, it should not be in the public sector. It should go into the private sector. So that will be, I think, one. But, as I've written in numerous places, we have areas of reforms in labor law reforms, Land Acquisition Act. We got a lot of reforms to be done in higher education. So the list of reforms. And within each of these sectors, of course, there are many things that need to be done. But we are on the right track. I think the government is doing well.
Okay, I also wanted your insights on consumption. Now, here in India, there's been a lot of conversation about the consumer sentiment being down, consumption itself being badly hit in the last 3-4 months. Now, I know that you've cited data from the first 6 months to say there are many parts like electronics and mobile phones that are still doing well. But is there something that we can do to at least fix the consumer sentiment? We are going into a festival season and nobody seems to be in a mood to be buying too much.
Look, I mean, I hear a lot of this storytelling that, the sentiment is very low. Consumption is not picking up. I think most of it is coming from the auto, it seems to me. But be that as it may, we also sort of need to look at what happened in this second quarter of this year. Right? The latest GDP data we have were till March 31, 2019. Also, I would like to see what has happened since then. But the bottom line on your question on private consumption or consumption in general is that the government is already stressed in terms of its expenditures. Its fiscal deficit is an issue, especially once you take into account the fact that there is a lot of borrowing that is taking place lately, which is off budget. It's called the extra budgetary borrowing. One estimate that has been put out is that in 2017-18, where we have these numbers available, the fiscal deficit, once just the central public sector fiscal deficit, once we pull together all the expenditures of the extra budgetary borrowing, was about 5.85%. Now, that compares with the budgetary fiscal deficit of 3.46% only. Extra budgetary borrowing has been huge. And I know that, the Prime Minister is very ambitious. He wants to move forward faster on many of the social issues, on defense. And so that has led to very, sort of loosening of the hand via the instrumentality of extra budgetary agencies, such as the Food Corporation of India. There's NABARD, the agricultural bank, which can borrow, which doesn't go onto the budget, it's borrowing, etc. So, the government is really spending quite a lot already.
Yes.
I won't put the burden of this pulling up this consumption demand on the government. I think we should take steps, and the government has done some. This is meaning, therefore, it is to the financial sector. So we need to do more on the financial sector front, so that private sector can borrow, including consumers for cars and other white goods. That is where I think the action ought to be, and some of the items in the package that the finance minister has announced exactly are in that area.
Great. Great to have you with us and to have this conversation. Thank you so much for joining us here on Mirror Now, Mr. Panagria. And let's take off from the point that Arvind Panagria has made about this is a good step and a series of steps that have been taken. But there is so much more that has to be done. Where do we go from here? And let's say good evening to the rest of our panel. Surjit Mazumdar, economist, joins us this evening. Tutu Dhawan, auto expert. Professor Arun Kumar, chair professor at Institute of Social Sciences, joins us this evening. Always good to have you. Feroz Aziz, Deputy CEO of Anand Rathi Wealth Management, and Abhishek Mishra, leader of the BJP. Mr. R. Gopalan, former Secretary of DEA, will be with us shortly. So let's begin with Surjit Mazumdar. Mr. Mazumdar, there is a lot of consensus on what has happened today. Seems to be a good move to boost the sentiment. Where do we go from here on is also a question.
Well, let me begin by saying that I'm not part of that consensus because I see today's, what the finance minister said today and what was said during the budget speech in a similar vein, that both of these seem to be attempts to talk the economy out of a slowdown rather than announcing substantive measures which would really affect the root causes of the problems that the economy is facing. Everyone is recognizing that the real problem is one of demand. And one must answer the question, why is there a problem of demand in the economy today? Why is it that the economy is facing the situation that there isn't adequate demand, there isn't adequate spending by different segments within the economy? So if you go to that reason, then the problem that has to be addressed, if that is of demand, then I think the state or the government should be thinking in terms of stepping up its spending. Not only in the short term is that something that is required, it is also required to address what in my view are the structural problems behind this problem of demand that we are now facing in an acute sense, but have been facing for this entire decade.
Okay, fair enough. I take your point, and I do agree that structurally a lot more has to be done on a reform level. But let's begin with what's been announced today, and I'm going to take that across to Firoz Aziz. Firoz, many are also saying that some of the wrongs that came along with the budget speech have been corrected today. Is the investor happy with that?
See, I think, Tanvi, you're absolutely right. I think whatever was expected from an investor standpoint, generally investors are worried about their taxation and the conducive environment for the capital markets to grow. I think both the sides have been addressed reasonably. Of course, a great attempt has been made because from a taxation standpoint, all asset classes, most of them are subject to capital gains. Of course, equity, which is a large component of a growth asset out of the four important assets, equity is a very important asset that has been given this exemption of the increased surcharge. So I think taxation has been addressed and has been taken back to pre-budget levels from an additional surcharge perspective. And the other thing is the capital flows to the equity market are addressed because if there is transmission of a lower interest rate, that automatically addresses a certain portion of the demand and also transmits the lower interest rates for deposits, which means that an investor is more compelled to have a flight of capital from debt to equity. That can propel liquidity in the equity market, which is what was lacking. The only people who were saving the equity market was the domestic institutional players. I think now everybody will join hands. Retail, domestic and the foreign portfolio investors will come back. I think both from a return perspective and taxation perspective, it has done a fair job. At least that's the first attempt.
Okay, fair enough. And I think the reaction of that we will all see on Monday morning when the stock markets open, perhaps after a deeper analysis over the weekend of what was announced. But Tutu Dhawan, one of the sectors that's been making, grabbing headlines for bad numbers, for falling sale, and for some hope from the government has been the auto sector. What's your own sense with what has been announced today? Is that a good start?
Honestly speaking, I don't think this start is going to affect the sales of automobiles, although it would give some incentives to industries. But to the auto market, it is all, I would say, a knee-jerk reaction. The auto market flourishes only if there is industrial growth. If you have surplus money, you would like to spend it, you would like to change your cars, you would like to do all sorts of accessories and things that you would like to put on. But if there is no inflow of money, auto sector itself cannot become a profit-making industry.
Okay, but for example, here is a government which is saying that we are going to completely overhaul the fleet of the government itself and buy a new set of cars. Is that a sensible thing to do, to actually go ahead and spend taxpayers' money simply to boost the sales of the auto industry?
I think that is only trying to woo the manufacturers rather than the industry itself, because what are you trying to do is to take off all the load of the manufacturers, but how does a common man benefit out of that? Or
Correct.
How does the common man participate in trying to increase the sales? So there are a lot of things that one has to go into, and of course all this downturn started only about 2 years back after we got in the new formation of GST and all. So there are public sentiments, who are crying about 30% they pay tax on their income, and then again they pay 28% on automotives, and of course certain places they pay 43% on automotive purchases. So all said and done, by the time it ends up, a common man has to dish out a lot of money in taxes alone.
Abhishek Mishra, do you want to respond to that before I go across to Professor Arun Kumar?
As the Honorable Finance Minister today has clearly said, that the government's primary focus is the economy should get a boost, a stimulus, and the economy should move forward. The Prime Minister has clearly set an ambitious and achievable target of $5 trillion economy. Today, whatever concerns were addressed by the business community, the market, the investors, I think almost all, and even the common man, I think every problem, most of them have been resolved. For example, right from the auto industry, that the government will start buying new vehicles, to removing the surcharge of the foreign investors. I think from a very wide spectrum, resolutions have been done today. Also, for the common man, the taxation was an issue, and I think the taxation problem, I think it has been now resolved to a large extent. The minister clearly has said it will be a faceless system from now on. It will be a centralized system, and whatever notice, the reply will be resolved in 30 days. So I think we are moving towards, a very glorious chapter wherein now that any taxation problem will be resolved. And I think for the common man, it's a very big thing, even for the business community. Now, coming to the more important point of the surcharge, removal of the surcharge on the long-term and short-term capital gain. Now, this gives a boost to the investor, and hence you will see investment coming in, as one of your panelists said, right? Even from the foreign investor, the retail investor, along with the domestic. So you see the share market going up, you see market capitalization going ahead. The companies will have more money, the market will increase. So right from investment, and most importantly, the loans will get cheaper. The most important thing, I think, for the vast majority of the country would be that the what Reserve Bank it was giving the thing to the banks, now it will be passed on to the end consumer. Hence, the home loan, the vehicle, all will be cheaper. So you can see I think it is something which has to be appreciated by all, and it's a dynamic. You see, understand, Tanvi, policy making is a dynamic process. You make policy, you take feedback, you see on dynamic how on the ground it's working, and then you modify the
Okay, so
things.
let me
I
say
think
this,
today,
Mr. Abhishek
the
Mishra,
Honorable
and I'm
Finance
sure by
Minister,
now
in
you've
vision,
heard
the
this.
Prime Minister has done a very wide shift.
But it's not as if every problem of the Aam Aadmi has been solved. I have simply said that this is a good beginning. I think this is an acknowledgement that there is something that needs to be done. Here is what we can give you right ahead of the festival season. We will have deeper conversations and come back with more in the coming weeks. So let's not just say that the government has delivered on what needs to be done to fix the economy. There's barely any structural change that's coming here.
No, I've said
This
most of the problems have
announcement
been
is
addressed
more
today.
about correcting
It's a
the
beginning, and
wrongs
most of the
from
problems
the
have been
budget,
addressed.
rolling back the announcements that actually angered and upset India Inc. and the investors, which led to a lot of noise. Now, Professor Kumar, would you agree that what we've seen right now is because there was so much of noise that was created in the last 2 months, and industry had begun to speak up about slowdown and ring the alarm bell, and this is something that's been just given to them, saying, okay, you are unhappy with these moves, we've changed this, we've gone back on it, now let's sit and talk about what else is your concern.
So you are right that basically this is a package for the organized sector of our economy, where a lot of complaints had been coming after the budget. But let's be clear that the government has been in denial, that there's a slowdown in the economy. But of late, first the Economic Advisory Council, the RBI, and then now the Deputy Chairman of the Niti Aayog, they've all said that things are going bad to worse. And the slowdown in the automobile sector didn't start 3 months back. It started almost a year back. Similarly, the slowdown in the FMCG sector also has been slowing down. So the real problem is that the problem began with the demonetization, because of which the investment declined. The question that needs to be asked is that if the economy is growing at 6%, 7%, why is the investment not growing faster? Why is the consumption not growing faster? And why is there a problem of demand? So the economy is not really growing at 6 to 7%, it's growing at much less, because the unorganized sector, which has been hit very hard by first demonetization, then GST, then by the NPA and the NBFC crisis. So we needed a package for the unorganized sector, because that's where the demand needs to be revived. The budget as it is very short of resources. The fiscal deficit is rising because tax collections are short, and the expenditure will therefore be cut back. So we have to decide whether to allow the fiscal deficit to rise. And you know that the fiscal deficit is much higher than what the government says, because of the borrowing from the public sector and the state government's fiscal deficit. All told, the fiscal deficit is running at about 8 to 9%, and not just 3.4%, which is the central government's fiscal deficit. So do we have the space to spend on the organized sector and on the unorganized sector? If the choice is mine, then I would say first start spending on the unorganized sector, revive demand there, that will then seep into the organized sector. If you do it only for the organized sector, then it won't seep into the unorganized sector, because the organized sector generates very few jobs. the CMI data shows that the workforce has declined from 450 million to 410 million. 40 million people are out of the workforce. And that shows that their demand is going down, their incomes have gone down, and the farmers' incomes are down. So you need to do something for the farmers also.
Correct.
So the package needs to be for the unorganized sector, but unfortunately, the influential sectors are the industrial sector,
Yes.
the corporate sector. They have been putting their voice in, but the voice of the unorganized sector is not there.
Yes,
That
because,
is
you know,
where
this
the
is the
big consumer is. 94% of the employment is there.
Yes, and I'm going to say something which may be very unpopular, but the fact of the matter is that there has been some amount of pain in the economy. There's been a job crisis brewing, companies shutting down, you know, people losing their jobs, not just in the last 1 month. This has been going on for a while. It's only now suddenly that India Inc. seems to have found its voice to start saying it vocally. And one can only hope that the announcements made by government today aren't enough to just, you know, say, okay, these are your SOPs, now shut up. And don't talk about it, you know, this publicly. Let me also say good evening to Mr. Gopalan, former Finance Secretary. Thank you for joining us. But before I come to you, Mr. Gopalan, on the point that Professor Kumar was making, Surjit Majumdar, would you want to weigh in here? Consumption is a big problem. People don't seem to be buying your daily items the way they were a couple of years ago. Does it really help to make your home loan or car loan a little cheaper?
Well, that's precisely the problem. If you look at the situation of the industrial sector, not just in the last 1 year or 2 years, but over the entire decade, you see that the industrial growth performance has been extremely poor. Investment growth has been extremely poor. Export growth has been extremely poor. Now, you basically had some segments of the economy sustaining the growth on the basis of their consumption. But large parts of the economy were badly hit. People didn't have employment, unorganized sector was hit, things became worse with demonetization. And in the absence of their ability to create a demand within the economy, now even organized sector has started feeling the pinch. Because after all, different parts of the economy are linked. Organized sector products are not necessarily purchased only within the organized sector. So the effect on the rest of the economy, the fact that there isn't enough purchasing power with large segments of the population is now coming to hit even the corporate sector and the organized sector. And therefore, you are now seeing much more talk about a slowdown or a crisis, even though the slowdown or crisis has been afflicting the economy for quite some time.
Absolutely. Absolutely, you're absolutely right there. And this is what we've been talking about for several months now. Mr. Gopalan, a significant part of Finance Minister's announcements today had to do with the financial sector, with the banking sector, which itself has been struggling. Do you think when the Finance Minister says that the banks will immediately pass on the rate cuts, that the banks need to start lending, you know, to specific sectors, is that a prudent thing to do?
Well, I mean, that's a very good question. But meanwhile, I also had the benefit of listening to my two predecessors who spoke, and I agree with them totally, both Mr. Surjit and Mr. Professor Kumar. I agree with them totally. We should look at why it all started. 6 years, from 6 years onwards, capital goods, growth has been either imported capital goods or domestic capital goods growth has been zero. Export has been going down on a real basis. They have been going down. So this problem has been there, and demonetization and GST came about, and unorganized sector took a very big hit. Now, as Mr. Surjit said, it started biting only now the organized sector, and therefore all kinds of noises are being made. But unorganized sector does not have a voice, and therefore it was not looked into at that point in time. The employment numbers started dwindling. That did not ring a bell. Now, once the demand on automobiles and those kind of sectors, are falling, then people are really, worried about. Now, look at, I have to give you one number. See, the two-wheeler sales, 17, 18, 18, 19 have reached about 2.1 crore numbers, whereas the previous years was 1.5 to 1.6. Now, that was a growth rate that was going. With the NBFC, turning the spigots off, money was flowing and therefore more, purchases, kind of took place. All these things gave a view, some kind of a very illusory feeling that economy is growing very well, whereas economy was having a problem right through in its basics. Now, your question about banking system, I have got a very difficult, choice in this. First, you are now saying that the banking system has to pass on whatever cuts, the repo rate cuts are now going to be made. But you are forgetting the point that this is one number or one rate which has got to reflect the market reality.
Correct.
You cannot, you cannot say that about 40%, 50% must go to priority sector and the rates must be so low. Then what will happen to the banking sector is that the net interest margins will come down, profits will come down, and therefore the dividend payment will be reduced. Their ability to, contribute from their own internal resources to, tier 1 capital will go down, and government has to fund again from its budget for propping up the tier 1, capital of the banks. So I think we have got to have a balance. See, in this country, feeling is that we'll have to, by imprimatur, we have got to ensure that, the numbers, the rates, interest rates have to fall by the bank for the banks are concerned. But I think that's a very wrong way of looking at the way the banking system should operate. I really think, I only hope that people in their eagerness to ensure that the rates come down do not destabilize the health of the banks.
Let me take that point across to Abhishek Mishra for a bit. Abhishek Mishra, what is your view on this? That just to bail out an auto sector or just to bail out a few big companies who are in pain right now, again, the pressure is being put on the banking sector. Again, the pressure is being put on taxpayers' money. Why should we be cleaning up a corporate mess every single time?
No, Tanvi, you're not seeing the larger picture. You see what the Honorable Finance Minister today said. The GST structure will be simplified. So when the GST structure is simplified, it percolates down to even a small, the tiniest of the businessmen. So GST simplification will benefit everybody, not only the large corporates. Secondly, the tax on startups has been removed. So you see, the youngsters coming into the market,
you a year
they will be
to do that.
incentivized to set up, become entrepreneurs.
That was again correcting a wrong that was brought in by your government.
I don't know. You didn't interrupt anyone.
Because that was not my question. Everybody answered the question I asked them. I asked you about the banking sector and putting pressure on them to lend, putting pressure on
yes,
them
I am replying on the
to
banking
pass on
sector.
rate cuts, and you are talking about angel tax, which by the way was brought in by your government.
I am replying to your question.
Yes.
I am replying to your question. 1 second. So your question basically was, why is the government only making the banking sector take the load of reviving the economy? No. Government is taking a holistic approach wherein the GST is simplified, the taxation system is also simplified. We are giving, the rate cuts also is one part of the segment. We are into improving the manufacturing sector. So it's a complete package. It's not only on the banking. We are doing everything possible. We have heard the business community, the consumers, and whatever was required. We have resolved issues. We have tried our best, and whatever more concerns will come, we'll address that also. So we are not passing the buck on to the banks. The banks are also part of the system. They are part of the Reserve Bank system. And what was required, as the Prime Minister also said, when the RBI is giving, the bank should also make home loans, vehicle loans cheaper, even loans to the common man cheaper. So it's along with the banking sector, GST simplification, making the tax process simplified. We have removed the surcharges. I mean, we have done, even for the MSME sector, removing the money to be refunded to them in the backlog. So whatever was required on each issue, we have tried our best. Most of the problems have been resolved. Hence, I disagree with your question. I think I've given a reply to you.
Let's move to the second aspect of this conversation, which is to say, what next from here on? Finance Minister made it very clear this evening that there are going to be more announcements that come through to fix the problem which is at hand. Feroz, let's begin with you. What more is required for the investor? What would you expect in the next two series of announcements?
See, I think from an investor standpoint, of course, there has been talks of revisiting taxation from an LTCG standpoint. I think there was some mention that this is not the end of the tax SOP, which is possible from an investor standpoint. I think LTCG becoming zero after 3 years, if that is also still in the pipeline, I think that will boost the sentiment from a capital market standpoint enormously. And I think it is only logical to do so, because if you don't have gains, there is not too much tax anyways you're going to collect. So that's one thing which is very important. I think the NBFC sector, which has gone through a lot of pain and in turn passed it on to investors in terms of debt mutual funds, bonds, NCDs defaulting. I think if that is not addressed, then the only asset which the investor believes in from a safety standpoint, that has come under question. I don't think enough was spoken to say how to protect the favorite asset of Indians in the financial space, which is debt. Has not been addressed enough. So I would definitely want a more stable credit environment, not just in the banking space, but in the larger corporate spectrum. I think if these two are addressed in the subsequent two other weekly releases of these kind of stimulus, will actually go a long way to build confidence on equity and debt, and in turn on real estate, which is very, very important. I think 60% of Indian HNI money is 62% is in real estate and gold. I think very, very eagerly looking forward to what's there for the consumer from a real estate standpoint. I think lower interest rates will give some boost, but I think it'll be very interesting to see the third important asset, which is real estate,
in the evening,
getting some degree of momentum, because a lot of money is stuck there.
Yes, and earlier in the evening we were having this conversation, and one of the builders who was part of my panel said that, until and unless you revive the realty market, which has been down and out now for a really long time, it's going to be very difficult to reactivate other sectors, whether it's cement or steel or paint or automobiles, and all of that is linked. So obviously the real estate sector is still waiting for the government to come out with something to help revive that area. Homes, home buying, building, that sector is still left to be addressed. I'm quickly going to go across to one of our viewers. By the way, we have a power-packed panel full of experts on economy as well as on banking and consumers. If you have a question, feel free to ask. RK Sharma is on the phone line from Mumbai. Good evening, Mr. Sharma. Go ahead, please.
Good evening, Tanvi. Thank you. I'd just like to ask your esteemed panel, besides Mishra ji, of course, are we seeing the ill effects of demonetization that the finance minister is trying to course correct? And are we going to get monthly budgets now in New India? Like, we are getting a budget in August, we're going to get a budget in the last week of August, we're going to get one in September. Are we going to get monthly budgets now? Is this how New India is going to move ahead?
Okay, Mr. Sharma, I get your point. Traditionally, budget speeches used to be more about where the government is going to get their money from and where they intend to spend it. Off late, what's happened, it's just not become about that. We get those documents later, and governments have started to use it as a platform to make announcements for what they intend to do. And so you're right, in many sense, what we saw today felt like a mini budget. But Professor Kumar, do you want to respond to the first part of Mr. Sharma's question? Are we looking at some of the ill effects of demonetization that are now being addressed?
Yes, so the demonetization is what affected the unorganized sector very badly, because they operate in cash and they are the ones who got hit very badly, and that's why people moved back from urban areas to rural areas, and the demand for Manrega increased dramatically, from 38,000 crores to 47,000 crores to 55,000 crores to now about 66,000 crores. And even then the RBI says that people are getting only 45 days of work. So if actually the full work was available, it would be much more. People haven't been able to return back from rural to urban areas and looking for work there. So the problem is that the unemployment situation is very bad in the country, and then it got hit by GST, because there's been almost 1,400 changes in GST in the last 2 years, because there's been so much confusion around it. And that not only confused the unorganized sector, but also the organized sector of the economy. And the unorganized sector got hit by GST because it wasn't getting input credit, and it is not going to be able to get input credit. the changes that have been announced by the finance minister now are not the course correction that GST requires for it to be friendly to the unorganized sector. So unorganized sector getting hit repeatedly, again by NPAs and the NBFC crisis, that's where the demand problem really began from. And it's, as Shurjit said, it has gone to the organized sector after that. And so we need course correction there. But everything is being directed towards the organized sector. For instance, the stock market may do well, but on June 4th, the stock market had peaked, and yet investment was not revising and consumption wasn't reviving. So if the stock market goes up, that's only for the organized sector, but not for the unorganized sector. Similarly, the real estate sector has been down for the last 6 years because there's been an oversupply of housing. There's oversupply of commercial property. Unless that goes down, I don't see the real estate sector reviving just because there's an interest rate cut or something like that. And as Mr. Gopalan correctly pointed out, the kind of changes that are being suggested in the banking system may actually lead to further problems for the banking system. So we have to be very careful about this transmission mechanism and the passing down of the interest rate cut to the sectors, etc. So in other words, the situation is far more complex, and the fiscal deficit has to be kept in mind. Because the fiscal deficit is already high. We have to take a policy decision whether we allow the fiscal deficit to rise further. That policy decision has not been announced. And unless you allow the fiscal deficit to rise, where will you fund all these things that are being announced now, or the schemes that may be announced for the unorganized sector? Where would the funding come from? That's a big question, given that the tax collections are not rising fast enough.
Yes, in fact, the tax collections is a very, very big concern. Even if the government publicly on camera doesn't accept it, many economists have mined the numbers to show us that they're absolutely not getting the money that they should be getting for all the spending that they need to do to revive this economy. So it's a bit of a tricky situation here. Let me quickly bring in Mr. Srinivasan, a viewer calling us from Bengaluru, a regular viewer of ours. Good evening, Mr. Srinivasan. Go ahead, please.
Yeah, good evening, madam. See, actually, I have 2 points. Number one is the GST system itself is, because I'm a member of the Chamber of Commerce, I can tell that the GST filing system is very, very simple and very good. But the problem is the law which has been made, in my opinion, has been done without application of mind. And I will tell you why the Damocles sword is hanging over every trader and industrialist. Now, supposing as a honest taxpayer, I am buying something worth 100 rupees from a buyer. Now, as a honest taxpayer, within the 5th of the next month, I am filing my returns and taking the input credit, which is my right, and I have got an invoice for that with my GST number. The seller, if he puts it instead of B2B into B2C, then the tax officer says that because my seller has put it into B2C, I am a consumer, and I have to pay 24% of GST plus penalty, which is a huge amount. This is a Damocles sword hanging over everybody.
Yes.
And you believe it or not, 4 days back, with the same thing, I went to the tax officer, who unfortunately is a veterinary doctor, and what she told me that, why don't you take credit for 2 months? Now, I asked her, if I buy one book which is on your table, one time purchase, who is going to give me credit for 1.5 months? So these kind of people who are putting these laws, first thing, the onus should be on the seller, because it is he who puts in the tax returns of his invoices. That will make ease of doing business very good. Thank you so much.
Well, very well, presented point, and actually bringing out what the ground reality is and why people are still facing so much of problems with the current structure of GST. And honestly, in every city you go, this is what merchants and business members will tell you. And the part about credit cycle that Srinivasan brought up is actually a very, very big problem. I'm running a little short on time, but final words also from Mr. Gopalan. Mr. Gopalan, again, I will come back to what is at the core, which is financing new projects, and the plight of the banking sector. How long do you think it will take for us to emerge from that? We are still discovering more and more bad loans by the day.
Well, the NBFCs The bottom of the NBFCs we have not seen as yet. Unless we do an asset quality review on the NBFC portfolio, we will never come to know which NBFCs are solvent and which NBFCs have a liquidity problem. We should settle that first. My information is that we have not reached the bottom of that. So there is bound to be some more pain on that, which will reflect on the banking system. Because banks have to take a full load in lieu of the NBFCs, and partly some of the money which had gone from banks to the NBFCs may also have run into problems. So this is a big problem which is still waiting to happen. But let me look into the banks first. No, the banks, though they are not willing to lend in a big this thing because they don't see the economy growing. Now that is one. Then look into the private sector. They are so over leveraged. They do not know how to dispose of, and there are no enough buyers for the property, and banks are not able to come to a decision on settling as to how this one-time settlement can take place. There are issues at every level which is preventing the financial system in smooth operation, and this also includes your transmission you are talking of, and these issues will certainly stymie the way transmission can go along. But unless the demand picks up in the economy, now we can go for rural roads, we can go for rural housing, we can go in for, all those things can be put in by public expenditure. But unless, as Professor Kumar said, unless the unorganized sector is able to come up, unless we are able to put money in the hands of unorganized sector, I strongly feel that whatever we are doing will be nibbling at the margin, not looking into what is the fundamental problem that is plaguing the economy.
Absolutely, and we need to again look at the kind of crisis that's going on in the rural areas, the kind of crisis that the farm sector is looking at, and start bringing in more, more stimulus and more structural reforms to fix the problem there. I'm completely out of time, so I'm going to thank all of our panelists for joining us. Here is an interesting part, a report that I was reading recently that speaks about one of the biggest and perhaps the biggest companies that we have in our country, and Reliance recently has done a deal, and they will be selling off a significant part of their business to an overseas company, and the money that Reliance will get from this will not be invested in newer projects, but that money is actually going to be used to reduce its debt. It's one of the biggest borrowers for our banking system today. Clearly, it's a company that's looking at not borrowing too much money in the near future, but actually reducing the money that it has borrowed. It's interesting why is Mr. Mukesh Ambani not too bullish on investing, at least in this year, even though he speaks and he talks about a $10 trillion economy by 2030. There are many problems in our economy that still exist. The job crisis still exists. We're still getting reports by the day about companies seeing fall in their sales, companies cutting down on their production, companies cutting down on their sales staff, on their work staff, laying off people. And that, unfortunately, is still something that the government needs to address. Finance Minister has promised us at least 2 more sets of announcements. We're going to be keenly looking forward to what that really brings. But meanwhile, we will also keep getting you more indicators and more examples of just how badly our economy has been impacted right now and where we are struggling. Completely out of time on this edition of The Last Word. Thank you so much for joining us. Have a good weekend.